6. The accounting equation. One of the most important concepts in understanding financial statements is the accounting equation. Do you remember this table? This table showed what you own on one side, and on the other side it showed what you owed and what belongs to you. In other terms, on the left hand side you had your assets, and on your right hand side you had liabilities and equity. The accounting equation is derived from this logic. And in mathematical terms, accounting equation states that at any given point in time, the assets equal to equity plus liabilities. So assets usually comprise of things such as cash, property, equipment, and so on. The same way, liabilities usually comprise of loan, payables, etc. And equity comprises of the capital or the money actually put in by the investors plus the profits made by the company till date. So let us look at an example and try to understand how the accounting equation works. Let's assume that you start your business with cash of $20,000. So there are two things that are happening. On one hand, from the accounting entity principle, the business is getting cash worth $20,000. So on the asset side, cash increases by $20,000. At the same time, the owners of the business have put in capital into the business. So the equity goes up by $20,000. So look at the accounting equation now. We have $20,000 on the left hand side and $20,000 on the right hand side. Therefore, the accounting equation is in balance. Next, let's assume that you purchase equipment worth $30,000 by taking a bank loan. Since equipment is an asset, you own that equipment from the business perspective. On the asset side, equipment goes up or increases. The value of equipment comes in, and therefore your total assets increase from $20,000 by $30,000, and therefore you have total assets worth $50,000. On the contrary, since you have taken a bank loan, you need to pay back the banker, and therefore you owe this money, and therefore this is a liability. Therefore your liabilities become $30,000. So look at the accounting equation again. 50,000 equal to 20 plus 30. Therefore the accounting equation is in balance. Next, assume that you purchase inventory on credit for $4,000. Inventory is an asset because the business owns it, and therefore it appears on the asset side. And now the total assets go up by 4,000 to 54,000. And on the liability side, since you've bought it on credit, you need to pay the vendor, you need to pay the supplier. Therefore, your liabilities increase from 30,000 and become 34,000. Now look at the accounting equation again. It's still in balance. 54,000 equal to 20,000 plus 34,000. Next, let's assume that during a month, you make a sale of $25,000, of which $10,000 is collected in cash and the balance is receivable from the customers. So you made profit of $25,000, and that appears on the equity side, and therefore your total equity goes up from 20,000 to 45,000. Same way, on the asset side, since you've collected cash, your cash increases, and therefore your assets go up from 54,000 to 64,000. Similarly, your receivable or the right to receive also increases because 15,000 is still collectible from the customer, and therefore your assets further go up by 15,000 and become 79,000. So now you have assets worth 79,000 on the left hand side, equity worth 45,000 on the right hand side, and your liabilities remain the same at 34,000, and the equation is still in balance. Let's assume that you pay off your creditors using $4,000 of cash that you made in the previous transaction. So on the left hand side, on the right hand side rather, the creditors go down, they disappear, and your total liabilities decrease from 34,000 to 30,000. And on the left hand side, the assets go down, the cash goes down, and your total assets are 75,000. Summary: the accounting equation states that assets equal to equity plus liabilities. This equation is a mathematical representation of the balance sheet. And as you saw in the previous example, the equation always balances, and it is for this reason that your balance sheet always balances.